Hi there, Amanda Crowther again here from Simple Acquisitions. Today's video is going to be about property criteria. Now, when the average home buyer looks for a personal residence, they look for specific criteria. 3 beds, 2 baths, bungalow, updated kitchen, 2-door garage, a man cave. You kind of get the point. The more items on their wish list that can be checked off, the more comfortable they are with the decision to buy. Although the criteria for buying investment properties might be different than with personal residences, the concept is essentially the same. As investors, we establish criteria that will help us get to our end goal. With a rental property, that goal is cash flow and profit. We here at Simple Acquisitions employ various selection criteria to assist in our acquisition choices. Let's take a look at 5 of those key ones now. 1, cash flow positive. A property may not be in the ideal cash flow position at the time of purchase, but it does need to cash flow. The rent from your tenants pays the mortgage, so it's important to have cash flow to cover that expense. 2, ugly duckling. An ideal property the ideal property is one that is the worst property on the nicest street or the best neighborhood. Real estate is all about location. Buying a property in a not so desirable location makes it challenging to get the right tenants, even if you do an amazing renovation. On the other hand, if a not so appealing property in a good area is fixed up, then getting good tenants will be less difficult. 3, below market value. This is buying properties at a discount. By implementing strategic improvements and/or enhancements to the property, we can increase rents. By increasing rents, we can increase the net operating income and as a result, raise the value of the property. Increasing the property's net worth can be useful for refinancing opportunities. Can't you see the incredible benefits of this buying strategy? 4, low vacancy neighborhood. Your positive cash flow is directly linked to occupancy. This criterion links to number 2 that we just spoke about. You want to buy in a market that has both economic and population growth. Growth means the potential for higher occupancy, and higher occupancy means more passive income. And the 5th is in the right niche. We look for properties that range between 5 and 100 units. This range is often too big for the individual investor and way too small for the large real estate investment companies. So for us, it's a good niche. We also like to look for properties that are large enough to have an on-site property manager. There are many other criteria that are factored into the buying decision. These include things like unit mix, building age, and construction type. Not all are going to be present for every property. But selection criteria are beneficial as they help us narrow down properties to those that we feel will provide them with the best financial results. An important point to note, though, is regardless of the criteria, if a deal doesn't make sense financially, it's not going to be a strong investment. To learn more about the financial evaluation of an investment property, sign up for our property evaluation video series. The link is right here on the screen. It's www.simpleacquisitions.com/property_evaluations. If you want to learn more about selection criteria or how investing in real estate can benefit you, just get in touch with us. Remember, real estate doesn't have to be complicated. With Simple Acquisitions, it's smart, secured, and simple. That's it for today's video. Thanks for tuning in.